Hello, hi everyone. So today I'll look at Airbnb. So my plan is to be looking at a number of stocks, and we will try and do this as much as possible for you to get more insight on how you can be making money through trading stocks. So my company today I'm going to look at is Airbnb. And before you look at any stock, the most important thing is for you to understand what the company does. And the good thing is that TradingView has made everything very easy for you. So what you do, just go on the ticker and then you'll come here at the bottom and choose the company under the financials, and you'll get an overview of what the company really does. This is just to try and assist you know what the company really does. So if you look at this, you'll see about Airbnb. So Airbnb Incorporated engages in the management and operation of an online marketplace. Its marketplace model connects hosts and guests online or through mobile devices to book spaces. So the company was founded by Brian. So Brian is still the CEO of the company in 2007. And you can use all this information to go more and just check what the company does and how much income it does derive. So if we come to the financial statements, this still under trading view. So the most important financial statements I do usually use are the income statement, the balance sheet, and the cash flow. And as we go through this, you will be able to see some of the big things I usually look at. So the first thing for you to look at is how has the revenue of the company been growing. So you will see that in 2017 we had a total revenue of 2.6 billion, but in 2023 now we are at 9.92 billion. So remember, 2024 results for the full year have not been released yet. Then the next thing I usually look at is also the gross profit, which is and you will see here that in 2017 we had a gross profit of 1.52 billion, and in 2023 we had a gross profit of 7.03 billion. So this is quite some improvement, just telling you how the company is able to produce and also the cost of sales being factored in for us to get the gross profit. Then I usually go and look at the net income. Then the net income is very important for us because we will try and see how much the company is making, because from the net profit, that is where we expect surplus for the company to generate dividends for the shareholders. So for the net income in 2017, we had a loss of 70 million. But in 2023, you can see we have already broken even and now we are making profits. And we made a profit of 4.7 billion in 2023. Then also very important for me is usually the basic earnings per share. So this is the amount of money, if this is the basic earnings per share. So if the company was to give out dividends using all the income they have received in that particular year, lessing all the expenses, this is the amount each year will pay you. So in 20, if the if, so in simple terms, if the earnings per share is negative, so that tells you that if the company was to be wound up and investors were to be given everything, there's nothing much really you could get. And in most cases, you'll find that companies that have a negative earnings per share are also companies that are making losses. So in 2017, we had an earnings per share of negative 0.12, but in 2023, now our earnings per share is 7.52. So this is quite some improvement. So that means if the company was to sell everything, so every shareholder per share, you should be able to receive 7.52. And we expect these earnings per share to keep on improving as the company goes on. Then also very important is to look at the assets. So look at the total assets and also look at the total liabilities. Is the company able to pay the total liabilities using the total assets that they do have? So that's very important for me. So in this case, you'll see that the total assets as of 2023 were 20.68 billion, and the total liabilities were 12.52 billion. So that tells you that if the company wanted to pay all the liabilities using the total assets, it's possible for them to do so and they'll remain with some money. Then also very important is just to check whether the cash flows are good. If the company has a positive cash flow from operating activities, and also how much of the free cash flow is there. So once I'm done with that, I usually would go to the chart, and in my charts is usually to look for impulses and corrections. And after I've looked for impulses and corrections, and I'll look for the next moves for me to be able to just identify where I'm going. So in short, just to show you what an impulse and correction is, an impulse is usually a strong movement in one direction. An impulse is usually a strong movement in one direction, and in most cases you'll find that markets move this way. Then now after an impulse, we will have a small correction. Then we can have another impulse, then another correction, then we can have an impulse. So the market doesn't have to move in one direction. So we can have another correction, then the market can reverse. So very important for you to notice that the impulse was the strong move in that direction, and where the market seems to struggle, that is where now we call a correction. So take for example, this is an impulse. So this is an impulse. So let me just show you. So sorry. So this is an impulse. So we can label it. That's an impulse. Then also another impulse also is this one also as well. Then also we have another impulse also. This one as well. Then also it's right for us to say this is also another impulse. Then so now straight we go to our chart and try and see what is happening. So I'd already done this, but in future I want to be doing this live in the markets for you to be able to identify how some of these things move. So here we have a bigger impulse. Here we have a bigger impulse that is happening. So this one here. So a bigger correction. So this is a bigger correction. Then after that bigger correction, we can see that we had an impulse. Then after that impulse, we made a, a correction. So now this is the correction. Now this is the correction we did, and then we had another bigger impulse. So what's important for me now is that the company is now forming a smaller correction, is now forming a smaller correction. So I expect the price of this stock to come down further for me to get better prices for us to be able to buy on this particular stock. So this is why I am waiting for the company to come close to our bottom. Once it comes close to our bottom, we will look for good entry prices at around 100. So this means that the next move I'm waiting for is this particular move. So I'm waiting for this particular move. Then I'll look for this trade to the upside. So I'm expecting the price to move back to the top. I'm expecting the price to move back to the top. I know this will take quite some time, but it's important for us to note that we can have alerts at around to 120 or 100. Once the price hits there, it will alert us and we can go in and we can make sure that we do not lose that chance of buying this good company. So I expect Airbnb to face short-term challenges, but in the long term, I want to buy this company and hold it. Thank you, and I hope you've learned something, and that's how we look at charts. Thank you, and have a good day.